Hello and welcome to this very special presentation titled How to Identify the Best Stocks. My name is Steve Chappell, the Director of Trading Systems Development here at VectorVest, and I am delighted to bring you this presentation because it's certainly one that has hit home for me over the years. And so we're going to be talking about some prolific techniques that you can incorporate into your regimen that can really bear out some incredible performance. And I tell you, the last several months here, or even really the last year, certainly as the markets were on more of a substantial decline, this has been either a cherry picker's paradise or a hazardous wasteland for many, I'm sure. So we're going to move you more towards cherry picker's paradise as a result of this presentation, is my sincere hope. So with that in mind, let's get into the teeth of it. All right, so I'm going to start off by pointing out, boy, if you haven't read that little green book by Dr. DiLiddo on the welcome page, do it. I could have cherry-picked many different parts of that and as it relates to this presentation, but I went with Chapter 13, Managing Your Portfolio, in that good portfolio management starts with selecting the right stocks. It truly does. It makes everything else so much easier if you've got the right players on your team. So just like a baseball coach, his job is to field the best team. And to do that, he's going to need some guys that hit for average so that when he gets those strong runners on base, they can steal some bases for him. And then he's going to need some sluggers, that can bring them all home. And so a good portfolio should do the same. And we're going to show you some techniques that can uncover all those different kinds of players. And to do that, we're going to leverage none other than Dr. DiLiddo again from an essay he shared with us on November 10, 2006, titled How I Use Stock Viewer. And so if I see something like that, like in this case, how Dr. DiLiddo himself does something with the platform he put together, I'll pay attention to that. So hopefully you will too in this very presentation. And what we're going to be leveraging is a tool in VectorVest. To get the job done, you're going to need the tools, the training, and the education to make it a reality. So I congratulate you for watching this because you're going to get the education around this very powerful tool called Stock Viewer. It is a gold mine of information, guys. I mean, it really is. It's our job to get in there and extract it. And so that's what we're going to be talking about. And the one thing that's not mentioned in the essay, because it was centered around just the practices, is having the wind at your back. I mean, you truly do. And we all here at VectorVest, Dr. Bart DiLiddo, certainly no exception. In fact, if you've attended any of our seminars, he'll tell you the single most important thing, is market direction. So we've got to keep this in mind. We've got to keep the wind at our back. So is this something I can do tomorrow? No, but once we start to get that wind at our back, again, this is going to be something that can really move the needle for you guys in a big way. All right, so let's get to it. First things first, let's talk about market direction because that's the most important part. All right, so what I'm going to do is come up here to the timing tab and from there go to market timing graph. When we land here, we can illustrate the point. The market moves in waves, right? And in bull market situations, the market has more prolonged and protracted upturns and shorter, swifter downturns. When markets turn sour, you have more prolific downturns and shorter, swifter upturns. And then when things get indecisive, there's lots of clouds, but earnings are still trying to hang on for dear life. You end up in situations like this where there's just a lot of back and forth. One of the best ways to deal with that is still to continue to leverage the most valuable signal in VectorVest, and that's your confirmed up call. And so that's what we're going to do, because that's where you at least want to get started if you haven't gotten started already. And it's a signal that's good for everyone. Some folks might start buying on green lights a little earlier. Some folks might maybe even a little earlier than that sometimes with something like a DEW. But you need some basis for establishing wind at your back, and confirmed call is something we can all use. So if I come to the confirmed calls list, the most recent up call, of course, here was the one on January 9. And you started to feel pretty good about this one. Certainly with all of the chatter that was surrounding things and the hope of a soft landing and so on and so forth. And you're making a higher high. And that's the first time you're making a higher high swing since really the wheels came off late 2021. And so there's a lot of reason really to emphasize this particular call here. It feels like we're getting on a roll, and that's really what we're waiting on now. Because if you get one here over the next several weeks, while it may not be as likely as we'd love to say, right, it's a possibility that's out there, and you would still be on higher low, higher high type action should that be the case. So yeah, I think this is worth demonstrating, And so when we look at January 9, that was the most recent one, and that lasted, at least in terms of signal, until this red triangle here. Now the guys should have detailed the mechanics of these signals, so I'm not going to get into that. More so just how to leverage them, right? And when I say, in the timing the market presentation that hopefully you watched prior to this one, detail the signals there. All right, so I'm going to get out of here. And when I do, what we're going to do then is go to the powerful tool. And just quickly before I do that, to find the views, you can either use the calendar down here, just go back to that date, November 10, 2006, or you can search for it up here. And when you get to that essay, you're going to see start off as, I've always loved Dr. DiLiddo's humor, but he presents this in a unique fashion. That is, he starts out with a quick, funny story about tax time. Walk into the guy's office, say, here's 2 garbage bags full of receipts. You figure it out. We all feel that way, don't we? And probably have felt that way recently. But what he's going to relate that to, of course, is the stock market, because it's like a blizzard of data. It's coming at us, at breakneck speed these days with just tick by tick information. And in large part, much of it is not very useful. And so it's our job to eliminate the noise and to get to the brass tacks of what's really going to move the needle. And so what he goes on to illustrate in that essay, of course, is several different ways that the stock viewer can be organized to produce winners that he likes to look at. And so if we go to stock viewer, we'll go to viewers tab. Over on the left, we can click stock viewer or click the large button in the middle, whichever case is best for you. When you get here, just quickly, we always have a lot of new subscribers, and we definitely want to help cater to that. This is over 9,000 stocks, and they're actually rank ordered top to bottom every single day. And we do so by an indicator here called VST, which stands for value, safety, and timing. And so it's the combination of the 3 prior factors for RV, which is upside potential, RS, which is consistency and predictability of financial performance, and RT. And all of these are on a 0 to 2 scale. Above 1 is favorable. So favorable upside, favorable consistency and predictability, and favorable timing. That's a 3-time winner. And there's no such thing as too high. It's just the higher, the better in all 3 categories. The higher the RV, the better they are at price potential. The higher the RS, the more consistent and predictable they are. The higher the RT, the faster it's going up. Okay, it's really that simple. Don't need to make it any more complicated than that. We're also going to feature this indicator here called CI, which is price growth persistence. It tries to find stocks that are just steady climbers. Okay. You also, of course, have value. And value, it gives you a sense of what that stock is worth. It's not a deal breaker per se, but we prefer, when at all possible, to buy undervalued stocks. So it's the intrinsic value of a company. Okay. And it looks at earnings growth, along with inflation, interest, and what we call a yield premium. And bottom line, without getting too stuck in the math, the more company a money makes, the higher value goes. Okay. And so when value is higher than price, that stock is considered undervalued. You're getting a really good, fair price, undervalued price on that stock. All right. So all of that being considered, we prefer to buy undervalued stocks, safe, undervalued stocks rising in price, right? So that's why we sort by this indicator. Now, that's the place to start, as it turns out in the essay, right? And what he likes to do is feature just the top 20. No need to really look further in his view, because the top 20 should be better than the next 20, should be better than the next 20, right? And so, boy, look at the one that's right at the top of the list right now. And you say, well, that would have been nice to find a little while ago. Well, I got news for you. You could have found it on just about any day for the last 9 or 10 months, right here at the top of the viewer. It's been persistently there, and that's something you want to pay attention to. When you open this up every day, you see the same stock up there, you ought to give it a look, because it's got the best combinations of those factors, and it's persistently saying, hey, look at me, So for example, if I go back to that confirmed up call on January 9, what was at the top of the stock viewer then? And look at the price. And oh, by the way, I put this stock into our Tampa 2-day seminar for those that attended that. And I did that back in November of last year when it looked like the best example of what a top VST stock should embody. So it's been on our radar for a long time. Okay. And so do these stocks have potential, and what do we look at? So first things first, I like to say, get into the rate. Do they have the potential? Right. Yes, they've got potential. 8% versus the market moving up 3% in just that confirmed up period. And through here, you also get a puncher's chance at stocks that can continue to sail even if the market becomes a little bit undesirable. Right? So SMCI pushing all the way up to 161% at this point. That ACLS, which was already pushing hard, up 72%. And so when confirmed downs are signaled, they sound a general alarm that we need to either tighten stops, consider options, move to cash, do something, anything that's in your power to hang on to those profits. But if you know some of these more helpful things like options, there was even opportunity to let some of the strong runners continue to run. And so getting off the ground at the right time is the most important part with the right stocks. Everything else from there gets a whole lot easier. We can even make some mistakes and generally do pretty well. All right. So that's the main emphasis I want to get across. The next thing is he likes to graph them, and really favor the ones that do the best embodiment of stocks that are persistently rising in price with persistently rising earnings. That's the main key. Those are the main 2 keys. Please read the essay. There's lots of great information in there. For time constraints, I'm trying to move here as quickly and methodically as I can. But if we isolate the date here and go back to January 9, you have smooth, steady rising price. It's at least making methodical moves to higher prices. And it's had a little bit of a swale because the market was in a down, right? So these downs largely are when the market's not performing well. Otherwise, what you have is persistently, and this is the engine, this is persistently rising EPS. EPS is earnings per share, and EPS is better than what you hear a lot about on TV. They're going to talk about whether a stock just met, beat, or exceeded its earnings expectations and give you little to do with what really matters, which is the future. And so our EPS is like a window into the future in that we take a lot of trailing data into account. We also take the consensus analyst estimates for the end of this year and next, extrapolate all that into a 1-year calendar lead, right? So when you see this marching up as it was into the up call on January 9, right? And what you know is earnings are continuing to rise a year from then, right? And what do we have now? They're starting to march up more effectively here again. So the picture is improving once again, right? So when it went a little bit dormant, guess what stock price did until it really caught up again, right? So good stuff, but that's the engine that drives stock prices higher, okay? And that is the culprit here again with, say, ACLS. There is no stronger correlation in the stock market, my friends, than earnings and where earnings is going to stock price and where stock price is going. Realizing at the end of the day, all we're really left with is likelihood. Unforeseen events can, of course, happen at any time, but that's the strongest correlation you're ever going to find, bar none. Right? And so look how smooth and steady that earnings is. Realizing almost none are a perfect straight line. That's about as good. And look what it's done since that date. And look what price has done since that date. This is the importance. These are picture perfect. The one thing I would say here is this was more of a breakout. This was a stock that in the semiconductor space, under a lot of pressure over supply chain issues and all of this stuff, right? Where COVID never happens, a lot of that's not there, right? But what it did have the entire time, in spite of all of that, was a consistent moneymaker. And when this thing broke out, she went running. Okay. So that's the importance of the information. You want steadily rising earnings down there. That's the engine that's going to drive these stock prices. And so whether it's a breakout or a persistent climber, it's got juice in the tank. Okay. The smoother and steadier on both accounts, the better. Or the better the breakout, that kind of thing is the real important stuff. Okay. All right. So from there, well, our next stop is, well, how do I put a lot of those pretty looking earnings patterns on my radar quickly? Well, his next sort is relative safety. And these are your best money makers. And these are the guys that hit for average. They're the ones that do really well given enough time to do really well. They're gonna methodically, move around those bases, if you will. Right? So how do I prove that? It's quite simple. One, let's look at a graph. And what I want to show is we want to favor the ones who look like this. See that? This is called a ruler stock in the industry, okay? This is United Health Group. And that earnings goes higher just about every single year, right? I think there's one little bobble there in 08, 09. Other than that, every single year. And it's actually even picked up pace. And what's happened with price? Price, as earnings has on a forward basis picked up pace, price picked up pace. What's it doing now? It's holding on to that strong pace. You with me? I hope you are. Vertex, just kind of emerging. And what's the pace look like? And what's the pace of price? Look at this sucker, Cigna. Look at the pace, right? And look at the pace of the chart. Now we're seeing some more volatility than we like in some of these potentially. And that's where, you can make some decisions, even between, say, United Health and Cigna. United Health, a little bit better on both accounts, but both very strong, And so that's the basis here. And then does it prove out? Has it worked historically? And well, yes, I could prove that to you ad nauseum by literally testing every single date in the entire database over the last 20 years, or I could do it a little bit quicker. So we'll go back here to the beginning, and then we'll do like 5-year increments in between, okay? I remember when I started here at VectorVest, we were essentially coming off what was predominantly a weekly service. So you'll see, oops, I got to go to 96. Man, time has flown by. Isn't that something? But January 5th, 1996, first day of the data in the first full year that VectorVest was in business, right? And so if we come up here and we quick test, say, the top 20, let's see if these stocks are money makers. So these are your top relative safety stocks then. A little bit different list. You've got International, IFF here, ABT, Abbott Labs, and Cintas, so on down the list, right? Sherwin-Williams is, boy, a great ruler stock, actually. It's a tremendous, look at this performance, okay? 6,600, 6,000%, 3,200, 3,000. Worst performer, IFF. Okay. But look, everybody says just buy a little bit of the S&P. That's bananas. It's terrible guidance. Look, you can do it. If you're just going to try to be long all the time, you're going to have some pretty prolific drawdowns at times, even with these great stocks. You can see that on some of the charts. But look, the VVC, which is a good representation of the overall market, is only up about 6%. S&P usually runs somewhere between 6 and 9. This is 41, okay? So we just got it right on that date, right? We like to, at events, play something called the birthday game. Just give us the day and month you were born. Pick a year over the last 25 years. Let's look at it. Realizing, if you pick one last year, it hasn't had enough time to A, really let those fundamentals take hold, and B, the market is either down or flat, so pretty challenging. But if you give them enough time, several years or more, let's speed along here a little bit. I'll go to my birthday in 98. Okay. different list. Johnson & Johnson at the top. Tootsie Roll. Boy, I haven't seen that one in a little while. Look at this. There you go. 15 to 7. 2 times market performance. Let's go to the next. Let's go to 2005. We'll speed along even a little bit more. Guys, I already know what all of them look like, okay? And just about every date in between is going to look very similar. So anyway, if we here's Walgreen Boots, right? So top money makers then on a consistent basis, right? Apple, of course, emerged on top here, but 40% compared to 6, right? So market timing is also important, right? This was not the beginning, but 2003, okay, was the beginning of a bull run, but you're getting into the teeth of the bull run here and off to a better start. Okay, so all the stuff that we've talked about in this video today are very important. All right, now what I'm going to do is bring us back up to current, realizing I'm already about 20 minutes in, and get on to some of the other sorts he talks about, because they're all important, and important for different reasons and perhaps different folks, right? So if I come up here to January 9 again, we've covered VST and RS. The next stop is going to be CI. You come in here to CI, and now you're 0 to 2, and you're looking for the hope is to put some of the strongest persistent upward chart patterns at your disposal. Okay. Realizing when the market's come down and is level with a year ago, it becomes a lot more challenging. So these charts get a lot more prolific the stronger the market situation that you're in. Having said that, the focus here is purely on price. And, we're finding stocks that are at least trying to walk up the page, right? And then you just kind of go down through the list and you look like this ADMA has been a lot more consistent, okay? So you're looking for there you go, Vista Energy. And look at that value continue to soar there, right? And so you just kind of go down through this list and you're favoring smooth, steady upward patterns. But just in general, since the market has kind of suffered here for quite a while, these are still some of the better opportunities by way of persistence. And so if we test that theory out and quick test, say the top 20, and do that just to say the confirmed down call to begin, right? Realizing some of these could possibly slug through. Look at this, 16 winners, 4 losers, top winner, 81%. And Dr. DiLiddo himself in the essay, I believe, says, I like to find these ones less than 10 in some of these readings when we can, So, boy, look at that sucker. And a bunch of good movers in here, 15%, market 3. Okay. And you saw some of them continued to sail. If we then go to the next sort, which is dollar change, this one can be eye-opening. I just got a confirmed up call at the close today. What's on the move? What's happening with the big boys? Hey, it's telling you, hey, look at me. Look, you might want to think about some semiconductors and some big tech. Chipotle is in here, and I've been showing some good strength, right? But the main message to me, the low-hanging fruit is, boy, I ought to consider owning some tech. That would have been a good decision, huh? You think? Right? And so, easy way to find those guys is just come right over here to watch list viewer, go to special watch list, and here's NASDAQ 100. You can also sort A to Z, and you can get right in here and, go back, and there would have been winners to be found in here. Any of these columns, you can just sort through the data. Top VST, always a great place to start. And there was a lot of winners to be found in here, okay? Sorry for some of the clicking around here, guys, but we're trying to prove out all of the evidence from the essay, and I think it's proven well. And we'll continue to do so. These are things that have stood the test of time, okay? Next one is sort by percent price change. What's really popping? Some main guidance here, he does provide in the essay, at least look for a buy rec. Look, if it's a P or a Q, probably want to skip through that guy. On many occasions, I've had to go 50 to 100 down a list to find, I like to even find some high RV, but YRD is really the first one that we come across that's at least a buy rec, okay? And so let's quick test that one. Okay. Wink. 18%. Now these guys, you prefer to see some better fundamentals here if you can find them. They can be a little squirrely when the RVs and the RSs are down there, but these are the guys that are on fire, that can really run. All right, so that's a way to find those guys. So, we've covered some ground here. Main takeaways. Look, a great place to start is VectorVest is in business. The way we rank and analyze stocks. High VST, high relative safety, high comfort index. These are wonderful attributes. Anybody that's been around to know that I've got my own search in VectorVest called Chappell's Champs, very much focuses on these kinds of stocks. Okay. And this is why. Yeah. It's all there. Right. So wonderful words of wisdom from our founder. They will continue, have stood and will continue to stand the test of time, is my firm belief. And hopefully now it'll be a part of your daily, if not, please, weekly routine on trying to find and isolate some of these really great stocks so that you too can look at a stock like SMCI sub $80 even, if you were paying attention last year, and may have persisted on through to the point where you're looking at it now at $218 a share. And we'll see you guys next time right here at VectorVest University. See you then.